Welcome to this week's market drama. We'll begin with the S&P 500, which was up 1.1% for the week. It puts it up 21.9% year to date. NASDAQ was also up the same, which puts it up now 22.2% year to date. So what happened? What drove market action? Well, we had CPI inflation data come in actually a little bit hotter than expected. Headline CPI came in at 3.3% year over year. Core CPI, which exclude energy and food, which tend to be the volatile part of CPI, were also higher than expected. It was 0.3% up month over month. Later in the week, though, we saw PPI numbers come out for September, which is the producer price index, right? So there's a consumer price index, there's a producer price index, and it was actually flat month over month, which was lower than expected. And that number on Friday definitely calmed the market expectations of inflation. Essentially, earlier in the week, market was a little bit worried of, oh boy, inflation is a little bit hotter than we thought. And then PPI numbers were cooler than expected. And it definitely took some of the concerns out of the equation. There was also minutes from the Federal Reserve last policy meeting that were released on Wednesday. And they revealed that several members preferred only a 25 basis points cut instead of the 50 basis points cut that we had, which definitely kind of gave a sense that there were some dissenting. There were some concerns that maybe we were cutting too much too soon. And that brought down the expectation of future cuts down a little bit. The probability came down a little bit. So overall, I think this is still just noise, right? One data point is not a trend. The inflation numbers have come down once you look at a number of months in a row. It's just taking a little bit longer than everyone expects. And I think that's reflected in the market, right? We're at all-time highs for the S&P 500, and the markets tend to be also looking at it that way. Next week, we have retail sales, which give us a very important pulse on the consumer. The consumer accounts for 68% of GDP. So if the consumer holds up and we're not going to have a recession around the corner and inflation continues to cool, I think that the story remains intact, if you will, and explains to a certain extent why the markets are where they are today. That is it for this week. Stay tuned for next week.